presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Hi, folks. This is Larry Pesavento for the Futures Show for TFNN. And what I thought I would do today to start out the show is review what we talked about yesterday, because the stock market was at such a critical level. I posted into the Tiger TV the E-mini S&P chart going back the last several months on a 60-minute chart, and we were looking at that 61% retracement that it hit at 1392 on the full moon of October the 29th. And then what happened is you'll notice that we had a really strong rally up to around the 14, 18 area over the time that Sandy was coming in, the hurricane. And then the market pulled down. As we were on the show yesterday, we were down around this 1400 level, and we talked about the support that was occurring at the the 786 retracement at 1398, and also the 618 retracement at 1402, and the fact that it had to hold that level, mainly because of the full moon coming in on the 29th. If it were supposed to be a good cycle, which we think that it is, then this is why we want to watch this retracement, that came back. This is similar to what we were doing when we were watching the pullbacks in gold down at around the 1722 level a few weeks ago. It's the same type of scenario. And then I'm also going to show a little bit later, after we do the S&P chart, we will go through and we'll look at the bond chart, because they fit together sometimes quite nicely. So what we're looking at now on this E-mini S&P, and it goes along with what Basil was talking about on his show, is with this really strong day that we're having and the way that the market has come off of this C point, which of the ABCD leg down at the 786 at 1398, with the fact that it's so strong that the probabilities of the CD leg being bigger than AB equals CD should probably be 1.618 of the ABCD leg, and that would take the S&P up to around the 1435 area is what we'd be looking for. Now, remember, we're going to have some really emotional stuff. Tomorrow is the non-farm payroll, I believe, or one of those big reports. I'm not sure which, but that's going to be a big report. And then also we have the election coming in on Tuesday. So my assumption is no matter who gets elected, the market's probably going to be moving up into that high. Now, the question is whether it can take out the high of September at 1468. That's 58 points from 50. It's around 50 points from where we are now in the S&P. That's equivalent of 500 Dow points. So whether it can get that high or not, we'll have to wait and see. All I'm doing is just looking at the time counts that I see here, and also looking at the fact that these lunar cycles have been working again for the past 2 months. We had the full moon on October the 4th, and then we had the other full moon that just occurred on the 29th. And so these are the numbers that we're working on. People say, how do you know it's going to come in on the exact date? You don't. So what you have to do is to try to add some pattern recognition to what you're looking at in order to to place your orders, because the astro stuff that we look at, that's related to time, and you don't put your orders in on time, you put your orders in at a price level. So in order to find that price level, you have to use support and resistance. And, Steve Rhodes covers this, Basil covers it, Darryl covers it, Tom covers it. These numbers, they don't work all the time, but the probabilities of them working more than they fail is very high. And that's what we're looking for, are probability trades where you have certain things working better than others. Now, someone asked me a question, what happens if we don't exceed this 1425 to 1429 level in the S&P? In other words, we just have a, one-day wonder type thing, that we just have a really strong day today, and then tomorrow, nothing happens with non-farm payrolls or jobs, whatever it is. And then then we just hang here and nothing happens into the election. Well, that would be very, very negative, because then all you've had happen was an AB equals CD occurring from October 29th into early November, and that's going to tell us a lot about what the move to the downside will be. But we don't know that yet. All we're knowing is that we had a positive bias coming into the full moon of the 29th, which was Monday, and now we're looking at a possibility of making this correction. So this is what we're watching now, and so we'll keep an eye on that. Now, the next one I want to cover, because we talked about this on the show yesterday, was the Treasury bonds, because we had been completing the same type of AB equals CD pattern. And if you get a chance to go into Tiger TV and take a look at this, you'll see that the actual high that we made yesterday came in exactly at the 786 level at 149.10, and it never got any higher than 149.11. So that was spot on, and then we're down about $1,000 from that point. And that's fits in exactly with the pattern that we're watching. I mean, it just can't be any more perfect than that. Now, they don't always work this perfectly, but when they do, these are the ones that you try to take advantage of, and this is why we were showing you this pattern and just the ratios that are there. All I try to do is to give you some guidelines of where these numbers are, and that's really what you do, because the whole thing of trading is not how much money you're going to make, it's how much money you have to risk to see if you're right, because we never know two things. A, we never know if the trade's going to work or not, and B, we never know whether how much money we're going to make on the trade. So we don't know whether it's going to work. We don't know how much money we're going to make on it. So all we can do is control the risk part of the risk-reward equation. And if we can move that to the positive just by going from 50 cents to a coin, from a coin toss to 55 or 60%, that's a huge edge, especially if you're making more on trades than you're losing. And that's what you're trying to do, is to make more money on trades than you're losing. And Basil, on his show, made a very interesting comment, is the fact that, at the end of the show, he said, well, I've got some longs, I've got some shorts. He says, frankly, I don't care which ones work. And that's an incredible attitude. That's the attitude of a professional trader, because he doesn't care. He doesn't know which ones are going to work, and if he did, he certainly wouldn't be on a radio show telling us. I'm positive of that. But so it's just a probabilities game, and you have to be able to think in terms of a probability working in your favor. And the more you work with these patterns and numbers that we deal with, then the more confidence you have of finding out which ones are going to be better than others. And that's the whole key to some of the things that we're trying to do when we're looking at these things, as they're happening, of course, and then also as we're looking at them in the context of educational purposes here at TFNN, which is, really, I don't know of any place that is any better than, what we have at TFNN. I think that's as good as anything that's out there that I've seen. Okay, now the next one that I wanted to talk about, since we're talking about commodities and commodities is related to money, is the euro, because we had a big move in the euro last night. And then the market came down to the exact 786 and 618 retracement. Excuse me, I have to correct myself. It came down to the 1.27 expansion of yesterday's range at 129.22, and that was also the 61% retracement coming off the low of October 30th. I put this one into Tiger TV, and I've listed them on the chart that you can see that we've actually hit those numbers, exactly. Since that time that we made that low, the market rallied and stopped exactly at the 61% retracement again at 129.85, and then it's pulled back to the 786 retracement at 129.35. So it's in this little tight trading range. But if the stock market is going to be really friendly, people are going to be converting dollars if they're going to be buying U.S. stocks. If we're looking at a European and Asia type thing, if they're going to buy U.S. stocks, they're going to have to convert to U.S. dollars, and that would mean that the euro would be stronger than the dollar. So that could take the euro all the way up to 130 1460. That would be equivalent to that 1435 level that we're looking at, potentially in the S&P. So these are the numbers that we're looking at. Now, let's play the devil's advocate here for a second and assume that the euro is going to fail here and go back below 129 again. Well, we have hit the 128.90, which is basically 129, 5 times in the last 5 days at that 128.95 level. And that was the 786 coming off of the low that we made way back in September. And so this is a really, really key support that we have in the euro at this 129 level. So you really want to, remember that level because it's very important. If you remember on last week's show, we talked about the importance of gold holding the 1697 level. Well, this is very similar. We have to hold this low at the 129 level. These are not mysterious numbers. I mean, Basil's using the same types of numbers that I'm using. He's coming about them at a little bit different way, but the wave structure is there, and that's what you're really looking for because you're just looking for an edge to try to get you to move into a trade that's moving in the right direction. Remember, folks, and I had to answer this question yesterday for someone, and they wanted to argue with me about the trend of something, and he was arguing me about the trend, and I said, well, you have to tell me what the time frame is on the trend. Otherwise, you can't tell what the trend is, because if you say the trend, in the stock market is down, since October, you're right. It topped on October the 4th. But if you're asking what the trend is over the last 3 days, since October 25th, the market has been up. So you have to use trend in the context of the time frame that you're looking at. And trend is nothing more than if you have higher bottoms and higher tops on the time frame that you're looking at, you're in an uptrend. If you have lower tops and lower bottoms, you're in a downtrend. That's why there's not a whole lot of mystery in trading. I mean, it's not a rocket science type thing, guys. We're not trying to put a probe on Mars. We're trying to find out, where we can make money in the Euro, S&P bonds, whatever it happens to be. And that's a, far, far easier task than to try to put a probe on Mars. And if you go back and look at the numbers that NASA uses, and I've covered these in other programs and webinars that I've done for TFNN, the same numbers that we use to predict the market are the same numbers that NASA uses to discover where these planetary things are coming from, and that's why it's so important. As a matter of fact, right after the break, I'm going to review that, and we'll talk about that a little bit, and then we've got to get into some commodities. If you have any questions, it's 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I'm going to announce the winner of the Great Panther Silver giveaway today. His name is Christopher in Chino, California. So Christopher will call in before 6 p.m. Eastern Time at 877-927-6648. He'll be able to pick up his prize. And I'm quite familiar with Chino, California, because on my recent trip the last week or so into California, I stopped at the nursing home there on Central Avenue in Chino, California to visit my very good friend, Robert, who is one of the premier coin dealers during the 70s and 80s in California. Then he had a stroke, and he's been in this home. He's doing okay, but, he's still incapacitated quite a bit. But when I was at Drexel, I was his conduit to buy Cougar Ants and Maple Leafs, and I would deliver those to his customers. This was back when when gold was trading at around $250, $300 an ounce. And some of the people that I delivered to were James Gardner from the Rocker Files, Lee Marvin, Richard Boone, the William Boyd family from Hopalong Cassidy fame, and there was a whole bunch of others, but I was introduced to a whole lot of really nice people through Bob, and it was really, another one that was really big was the fellow that did the Rockford Files, and his name escapes me right now, but I'll probably remember it a little bit later. It was Stephen Cannell's partner. Oh boy, Roy Huggins. That's who it was. Huggins and Cannell. They did. Oh my gosh, they did so many of those shows during the 70s and 80s. But one of the big ones, of course, was the Rockford Files with James Gardner. Okay, let's get back to talking about the market here, and we were talking about cycles and a little bit of how some of these things work. And I posted a chart into Tiger TV that shows the theory of Archimedes and how he came up with pi. And this is also the same type of a diagram that you have when you're dealing with the formula for Pythagoras, where where they get the ABC formula, but it basically comes, to finding the structure of pi, which is the circumference of a circle, and that's what we're trying to do. Now, I've also posted into the Tiger TV one of my favorite charts of all time, which is on page 89 of Garrett's book, Torque Analysis of Stock Market Cycles, one of the rarest books around, I guess. But on page 89, it basically shows how you square a circle. You square a circle, and the circle becomes an ellipse, and the ellipse becomes another square to a circle. And remember, when we're doing a chart, we're looking at nothing more than X and Y axes. That's all we're looking at. And what we're trying to do is to find the points within this XY axis where we can put a trade on with a higher probability of working as opposed to failing. Now, this particular chart that I have in the Tiger TV right now, which causes the forces and framework of circular structure, is the same. It's the same thing that happens to our planets. These planetary cycles are moving in Fibonacci spirals. In every single one of them, Mercury, Mars, Venus, every single one has its own orbit, and they're all elliptical, and they're all related to these mathematical formulas. And this is how NASA is able to do this. They put these things into orbit, and once they get into the orbit for Venus, the energy there just keeps the thing floating. And then when they want to get it to the next orbit into Mars, they fire the rockets. The rockets go into the orbits for Mars, and then if they want the thing to go into onto the planetary floor of Mars, and then they fire the rockets again, then it sends it right back down again. So they're using all the energy of the universe in order to power these cycles. And so that's what I'm trying. My original thing is to tell you that this is not rocket science. What we're trying to do, we're trying to find out what the S&P is going to do over the next couple of days or couple of hours, as opposed to the really tough part of the world of monitoring these these things that NASA does. And it happens to other things. Yesterday on the show we showed the picture of Sandy and how the hurricane was a perfect Fibonacci spiral from the center of the hurricane and how it expanded out. They're very, very similar. Now, most things in nature, and very few things that I don't know about nature are related to these numbers. All we're trying to do is to look at this X and Y axis and try to find a spot where we're able to buy and sell things, and that's all we're doing, is to get that probability in our favor a little bit. And the biggest part of trading, folks, is not this part, not looking at the technical analysis part. That's the easy part. The hard part is working with the toughest cycle of all, and that's the 9-inch cycle. That's that cycle from ear to ear, because you got to get your head screwed on straight before you can do any of this. Because if you don't do that, then you're looking at some real serious problems because you don't know how to control risk. We got to take a break here. 877-927-6648.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations, including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and if you have any questions, it's 877-927-6648. And the next one we want to look at is the gold market here. And we were talking about that yesterday, the fact that the market should have some resistance coming in around this 1725 level, mainly because that was the AB CD move. And if you'll take a look at that in the Tiger TV, remember that the A move down there was the number we were looking for. That was a 382 on the longer term basis, and the market came down, after making a high at 1794, and it's only made a 382 retracement. So this is very important that gold holds this level down at this 1698 level. Now, I've put in the highs and lows here into the Tiger TV. If you get a chance to look at it, it shows the ABCD pattern quite easily, and then it also shows that we have some intermediate support coming in between 1714 and 1710. And right now we've had just a little minor reaction of about $10 an ounce, which isn't much in gold, but it's certainly enough to it's tradable. Especially if you're looking for a spot to being to be a buyer or a seller. Silver's in pretty much the same type of scenario that we had in the gold market, and so as long as it can hold above that. $30 an ounce in silver, it still looks okay. Now, we were talking about the gold, coming down to the 382 level. We went from 15.22 per ounce all the way up to 17.97 an ounce, and now we've backed off to the 382 level at 16.97 an ounce, and so that's why it's important. Now, what I want to do is just to show you how these charts all look alike. I mean, it's just money moving. It doesn't really make any difference what they're selling, whether it's corn or gold or crude oil. They all look alike. As a matter of fact, no one can tell you what these charts are if they took off the what it was and what the prices were. No one would know what you were trading. In fact, that would be the best way to trade, is to not know what you're trading, because then all bias is gone. You stop and think about it a minute, folks. If you were just trading the numbers and not knowing whether it was, the euro or whether it was crude oil or whether it was wheat, how could you possibly have a bias? Because there is no bias if you don't know what it is. And that would be the ideal situation for a trader, is to not know what he's actually trading, just looking at the numbers. That's, of course, if you're a technician. If you're a fundamentalist, then that's a totally different story. Okay, now the next chart I wanted to put in was the December corn, because, we had that tremendous move that occurred. If you remember, we talked about this a lot. We had Rich Anderson on our program from Anderson Capital Management many times during April and May, because we were looking for this bottom in corn, and it came in exactly at $5 a bushel. That was the low of the season, and then of course we had the explosive move to the upside, where corn moved just about $20,000 a contract into the drought area. Then it made a 3 drive to a top pattern, and then since that time that it topped in August, we have come down, and we also hit a perfect 382 retracement at $7.05 a bushel. Now we're trading 50 cents a bushel above that right now. And if you really take a look at this chart, it's really interesting, because it's been in a really narrow range here for the last couple of weeks. But each time it's come down, it stopped exactly at the 61% retracement at 733 a bushel. And now what it looks like is we're getting ready to move towards $8 a bushel, because the bottoms have been higher, the tops have been higher, and so it looks like this market in corn still wants to move up a little bit, and it's a trading opportunity. That's what it is. I'm not trying to make a prediction on where I think the supply of corn is going to be, over the next couple of months. I'm interested what's going to happen over the next couple of days, because over the next couple of days I can control my risk. I can't control my risk that much if I'm looking at something 3 or 4 months or 6 months down the road. That's very, very difficult to do. This is one of the reasons why people like John Paulson and Soros and other people, they have to put these huge positions on. They can't get out of them like you and I can. I mean, they have to have huge liquidity in order to exit the market. If they try to get out of a $5 billion position in gold through GLD, that's going to take several days or maybe even a couple of weeks to exit that position. So we have a huge advantage when we're trading, because we're interested in what the next few days or hours are going to be, so we can control our risk much better. So the corn market looks like it's actually turned the corner to the upside, and so that's an important one. Now, one that someone asked me about, because we had watched this as it was forming its bottom, was natural gas, and because of the Hurricane Sandy, the price of natural gas jumped up quite a bit over the past few days. And the thing to look at on the natural gas, if you get a chance, is to look at the butterfly pattern that was forming down there in April. It was a beautiful ABCD butterfly pattern occurring near April 20th. And then we had the pullback, and we were certainly watching that one really closely. So we've got a caller here. We've got a caller from Dan in one of my favorite places, Sarasota, Florida. Hi, Dan. How are you?
Very good. Thank you, Larry. How about yourself?
Everything is fine. What can I do for you, my friend?
December lean hogs.
Okay.
I got a call.
What did you want me to? Did you ask me a question about it? Is that or where I think it's going?
Yeah, what does it look like? I've got a long on it.
Well, I think that the hogs look fine. I mean, we had a big ABCD form at the high back in September, and now the market just the other day on the full moon it stopped right at the 61% retracement. So this thing looks like it's at least wants to go another 4 or 5 cents higher.
Okay.
You don't want it to go below Friday's that low we made last week. You do not want it to do that.
And how about December cattle?
Okay, let me take a look at Christmas cattle for you, and we'll see what we can come up with. Give me a second here, and we'll pull it up here. I will. I'll bring the. As a matter of fact, I should put the. I'll put the hog chart into the Tiger TV when we're done here. But I'll look at the. The cattle are actually, much stronger than the hogs right now, which is good. And you're not short cattle yet, are you?
No, go along.
Because I think the cattle are going to get up to that 127 level without too much trouble. So cattle are a little stronger than hogs, and seasonally they're supposed to be this time of the year. Because we're into the Thanksgiving season pretty soon. I know people are always talking about turkeys, but a lot of people eat ham and steaks and stuff instead of turkey. So there's a lot of demand for meat during this time of the year.
Okay.
Does that help?
Yes, it does. Thank you.
Yeah. Well, see, I'd be looking to sell cattle in a day or two if we get them up around 127. That would be a 786 retracement. But frankly, with the way the Forex markets and crude oil and gold and treasury bonds and soybeans and corn, cattle is a much smaller market. So I'm interested more in the really big markets than I am the meat markets anymore.
Okay.
Okay, Dan, thanks a lot. And if you see any of my friends in Sarasota, say hello to them for me.
Okay, thank you, Larry. Appreciate it.
God's country down there for sure. Okay, folks, I put the chart for the live cattle into the room, and you can take a look at it into Tiger TV. You'll see that, and I'm also going to put in the one for hogs, and you'll be able to see that the hogs also made a nice retracement. Someone asked a question about sugar. And even though I don't trade sugar that often, I do follow it because it is one of the larger markets on the international front. And I'll put this into Tiger TV because this is a very nice technical market too, folks. It's one of the, if you had to pick an international market to trade, you'd certainly want to pick sugar as opposed to the cocoa and orange. I haven't traded orange juice in 40 years, and I'll never trade orange juice. So. That's that's the bottom line. Okay, we're going to take a look now at sugar, and what we'll be looking at here is we'll be looking at the March futures, and as you can see, it's had some really nice patterns for the past couple of years. It's been in a really strong downtrend. We've had lower tops ever since January 2011, and we're almost ready to take the bottoms out that we made at $18.90 per pound in sugar. Because we're trading at $19.35 a pound right now, and if we get below that, there's going to be a lot of selling because sugar, it can go anywhere from 11 cents, to 6 cents a pound. It's pretty volatile. What's interesting about this chart on sugar, that is, if you were to do a long-term, weekly chart on silver, you'll see that the high we made in 2011. Was $35.28 a pound. That was a little more than half of where we are now, and that was the 786 on the long-term weekly chart. So sugar, trades very, very nicely with the numbers that we deal with, and that's why it's so interesting to watch. I'll see if I can get this. Yes, there we go. We can put the weekly sugar chart up, and you'll be able to see it. And you'll see where we are. Now, there's an example of someone asking about trend, and this is a perfect example. The short-term trend in sugar is down. The long trend sugar is up, and so you want to be looking probably to buy sugar around 16. Okay, we got a call from another one of my favorite cities, Boston, Massachusetts. Dave, are you there?
Hey, Larry, how are you today?
I'm very good. What can I do for you, my friend?
Hey, I was wondering if you could put up Bank of America on a 6-month daily chart.
Sure.
And we have a descending trend line started on 9/14, and it looks like we popped through that today on some volume. And I was wondering, what do you think for upside on this?
Well, I don't think. To me, Bank of America's got to get above 10 in order to make any sense at all for me, because it's in such a long-term downtrend.
Right.
It's given up about 90% of its value since 2007, and everybody gets excited about it. Now that it's it had a beautiful bottom down there at $5 a share. I'll put that into. In fact, we were talking about that bottom at one time, because $5 a share is the point where stocks that go below $5 a share usually don't make it, and Bank of America stayed above it. But as you can see, the high that we made in April of this year, 2012, was around $10 a share, and now we're trading at $9.60. So, and I don't think it means a whole lot. If I were looking at this, what I would do, Dave, is I would let me just do this, and I'll show you what I mean. I'm going to blow this up a little bit, and I would be looking for, because the whole world will be looking for a breakout in this stock if it gets above 10, and I think that would be the wrong thing to do, because you'd be making a really nice, I've got a piece of bad data in here, son of a gun. Hold on just a second. I'll see if I can correct this. Otherwise,
okay.
I'm in, no, I'm not able to. Oh, I know what I can do. I can go to the, I can go to the hourly chart, and that would give me enough of what I want to see. Yes, that would be really good. Now, it's not in color yet, but I can get the pattern without too much trouble, and you'll see it real easily. Hold on a second. Oh, I've got bad data. I've been gone for a while, so I haven't cleaned up my stock data. So give me 1 second here.
Sure, no problem.
I have to increase this database. There's what I wanted to see. Okay, this is what I want to see right now. Okay, because we're right at, this is I think is what's going to happen. Now, this would be a really nice pattern for me, for what I like to do, because I love the butterfly pattern. And if we get this stock up to about, there it is again. It's gonna, if it clears 10, I'd be willing to sell it and not risk more than probably 60 cents. There's going to be a lot of resistance up there. The hourly chart that I put in for Bank of America is, and that would be double what it was, last year,
right.
From 5 to 10. So at 10, I wouldn't want to be long that stock.
You think you can make it to 10?
Well, it's a 9.59. That's not a big. That's only 4 or 5%. That could do that in a heartbeat. With good numbers tomorrow, or a surprise in the election, anything can happen to these things.
Gotcha.
Okay.
Sell it at 10. That's the plan. Thanks a lot, Larry. Great to have you back.
Friend. And don't forget, if it gets to 11, I'm wrong.
Will do, Larry. Thanks again.
Okay. Thank you for calling in, Dave.
Yep.
All right. We've got I need to cover the soybean market here. If you'll give me a second, and I will I'll bring it up and try to cover too much, because there's so much to do in commodities these days that it's really it's really getting exciting, because these numbers are they're a dream. We've got to take a break here. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and someone asked a question. If salt was traded, SALT, sodium chloride, I don't think so. It's pretty cheap. It's available worldwide because the oceans are, 75% of our surface of the earth, and that's where salt water originates from. So I don't think there's a salt contract. If there was, they would figure out how to trade it. What I put into Tiger TV now is the soybean contract on the weekly basis, and the reason why that's one of our larger crops. Corn, but by far, is the biggest, and soybeans are the second. And what's interesting about this chart is that after we made the double top back in July and August, and we were watching that very closely at that time, and the market dropped, well over $20,000 a contract, and it stopped exactly at the 61% retracement of the lows we made, last May. And so that's when the whole drought thing started. Well, the 61% retracement at $15 a bushel were the old highs that we made during 2011 and 2012, and then also again in early 2012. So when this happens like this, these old tops become support, and that's an important concept to remember, because that was the 786 retracement of the whole thing. So these numbers, they come back and revisit them again in time. And so if you're looking for verification that a potential lower high is coming in, the soybean contract is a really a good way of looking at it. And when you're trading soybeans, that's a very, very large contract. It's traded all over the world, and it's by far the global contract. And I noticed yesterday, I saw a thing on Bloomberg that I actually didn't believe. I have to check this with Rich Anderson, and that is that Brazil might pass us in production for soybeans next year. And boy, that would really be surprising, because when I first started trading beans, Brazilian soybean production was only about 15% of world production, and now if it passes the U.S., that's really going to mean something. By the way, Brazil is one of the countries that has the greatest resource that man could ever ask for. They have the best plentiful supply of fresh water on the planet. And I think that's, keep in mind if you're looking at an emerging market, that's something, to keep in mind, just about that. And someone asked me one other question. It's not commodities, but it is commodity related, and that's the price of or the stock of Newmont Mining, because we were certainly interested in this stock when it was making the lows down at 42 dollars a share. It was making a beautiful Gartley double bottom pattern there, and I will put that into the Tiger TV so you can take a look at it. And it also has just made a nice little correction at the 382 level. And so I really don't think that, there's nothing wrong with this. This has had a beautiful three-drive to a bottom pattern that occurred in May, and then back in July when we were looking at this, late July, early August, it made an ABCD pattern, and we were very bullish that stock at that point. This is when gold was trading around 1522, folks. And now what we've done is we've completed an ABCD pattern on the downside, and it stopped again, right at the 382 level. And so this is why, Newmont looks like a, very, still a pretty good stock as long as it can stay above, $52 a share. That's what we're looking for. So if we can do that, we're in pretty good shape. Well, we're ending the show. I will not be on the show Monday. I have something that I have to do. And I'll see you folks again on Wednesday, and may everybody vote, and may the best man win. Live every day in an attitude of gratitude.